Welcome, everybody, to our webinar this morning. This is Ed Avis. I'm the Managing Director of APDSP, and I'm very happy that you are all with us here today. Our presenter for this webinar, which is Saving Serious Money with Leasing, is Camille View. Camille is a sales consultant with Commercial Capital, and she's a board member of APDSP. Many APDSP members know Camille well. She's worked in the business for 23 years, and the reprographics market is her specialty. I want to let you know that if you have questions, you are welcome to ask questions, and we encourage that. There's a questions panel on your screen that you can just type in questions whenever you have one, and I will read them to Camille when her presentation is done, and we can answer them that way. If for any reason you don't see that questions panel, click on the little orange arrow near the top of your GoToWebinar panel, and that will open up those tabs. And feel free to submit questions at any point during the presentation. Don't wait until the end. Go ahead and ask them so that you get them asked while they're fresh in your mind, and then we will have Camille answer them at the end. Okay, I'm going to switch the screen to Camille so that she can take over here. Camille, are you ready?
I am ready.
Great.
Can you guys see my screen?
Yep, looks great, Camille. Thank you. It's all yours.
Great. Thank you, Ed. Hello, everyone, and thanks for joining the webinar today. Today, we're going to explore 2018 Section 179's opportunities, incentives, and what type of equipment and leasing qualifies for this robust incentive. But first, a little background on myself. I've been a leasing professional for 23 years, so I have a lifetime of experience partnering with vendors and businesses owners like yourself, growing their businesses by taking advantage of a lease option to acquire equipment. I have specialized in the reprographic industry, giving you the confidence that I have the knowledge of your equipment as well as the type of customers you work with. Here's a bird's eye overview of Section 179 depreciation deduction. Let's take a quick look back in history. Section 179 is not new. It was enacted in 2008 with a limit of $125,000, and the deduction began to phase out for companies that spend over $500,000, making it a small business tax incentive. Section 179 was slated to wind down in the future years with a reduced reduction limit, and eventually it was to be eliminated completely. However, Section 179 has proven very popular, and over the last few years, Section 179 has gone through numerous enhancements via multiple stimulus acts designed to give businesses of all sizes incentives to invest in themselves by purchasing, financing, or leasing new or used equipment and software. 2018 has the most robust incentives, which is what we will explore now. What is Section 179 of the United States Tax Revenue Code? It's a tax incentive designed to take the burden of your taxes away for your company by investing in equipment. Section 179 allows a taxpayer to deduct certain types of property on their income taxes as an expense, purchase or lease the equipment, have it in place by December 31st, 2018, and depreciate it 100% this year, rather than requiring the cost of the equipment to be capitalized and depreciated over life of the equipment. Section 179 accelerates your depreciation. Deductions. Oh, this is what you guys have been waiting for. The 2018 deduction amount is $1 million. This is a large deduction. You don't have to spend that amount, as it is up to $1 million. And the equipment doesn't have to be new equipment. It can be used equipment, as long as it is new equipment to your business. The 2018 spending cap is up to $250,000 in annual equipment purchases, which literally took this from a small business tax incentive and expanded it into businesses in the middle market. With the 2018 bonus depreciation being 100% of new or used equipment purchases in 2018. This part is new in the 2018 Section 179. Here's a flyer that we put together and is available on our website at cccKC.com. It gives you great examples of how Section 179 literally lowers the cost of acquiring equipment in 2018. Did you know your company can lease equipment and still take full advantage of Section 179 deduction? In fact, leasing equipment or software is a preferred financial strategy for many businesses, as it significantly helps with cash flow and with profits as well. Who qualifies for Section 179? All businesses that purchase or lease less than the $250,000 in new or used equipment should qualify for the Section 179 deduction.
Hey, Camille, can I interrupt for 1 minute? Camille, you've mentioned 250,000, but your presentation shows 2.5 million. That's the correct amount, right?
Oh, that's true. 2.5 million.
Great,
right.
Thank you.
2.5 million. Yep, sorry guys, it's always a matter of putting together the script and then matching it too.
Thanks.
So yeah, it is 2.5 million in annual equipment purchases, and now that is on new or used equipment and purchases. That's really the newest thing for 2018, is not only the amount has gone up, but also the 100% of new or used. It didn't used to include the used. So sometimes most people think this deduction is some kind of mysterious or complicated tax code, but it is very simple. If you buy or lease a piece of qualified equipment, you can deduct the full purchase price from your gross income. Here's some examples of how it can lower your tax burden. As you can see on the flyer that we've produced, we're using the example here of $50,000. And the 2018 depreciation will give you a tax savings benefit of $17,500. I use the $50,000 as most purchases in the reprographic, would average about $50,000. Some are higher, some are lower, but all equipment does qualify. So you can see it virtually lowers the equipment cost that you're trying to either put into your business to create more business or to sell the equipment to your customer lowers it to around $32,500. Now, this illustration assumes a 35% tax bracket. And of course, this is a simplified overview of Section 179. I should always qualify by saying, check with your tax accountant, as each company is unique. And I'm not a tax consultant, I'm a leasing consultant. But you can always get the flyer. It's available at our website at cccKC.com, and helps accelerate your sales and your customers' bottom line. Flexibility. Take advantage of Section 179 in equipment in a variety of ways with commercial capital. We did produce a video in 2017, and it hadn't been updated with the amounts of the deductions, but that are slated for this year. It has last year's, but it has some very valuable information on it, so I thought I would play that for you today. So let's go ahead and play that video now. Hi, Camille View, Lease Financing Specialist at Commercial Capital Company. I want to take a few minutes to talk about the U.S. government Section 179 tax incentive. Section 179 is an IRS tax code that allows businesses to deduct the full amount of the equipment's depreciation value on qualifying equipment that has been leased from your gross income during the tax year. This is an incentive from the U.S. government to encourage businesses to lease equipment and invest back into their companies. So, how does Section 179 work? Many companies write off the depreciation value of their equipment each year. The IRS created this tax code that allows businesses to deduct the full amount of the equipment's total depreciation in the tax year they leased or purchased their equipment. Businesses can deduct up to $500,000 per single purchase, or a combined amount up to $2 million. Yes, a company can deduct up to $2 million with leased financing equipment. There are some specific requirements when utilizing Section 179. First, the equipment must be purchased in the tax year that depreciation will be deducted. Second, the equipment must qualify for Section 179. Buildings, land, and some vehicles do not qualify for the 179 tax incentive. And lastly, the equipment must be put into service the year in which the deduction was claimed. Many of our customers ask us, what's the difference between Section 179 and bonus depreciation? Section 179 tax incentives can be used on new or used equipment, financing, or purchases. Bonus depreciation only covers new equipment purchases, up to 50% of the depreciation. Your company must be the first owner of the equipment. In some instances, a company can combine both tax incentives, but it's only valid on new equipment purchases. When paired together, a company can save more than they are spending on payments in their first year of owning or leasing the equipment. Commercial Capital Company also offers 3 promotions that, when paired with Section 179, can save your company even more money and improve your company's cash flow. Commercial Capital's Baker's Dozen program works great with Section 179 in combining them. It's an opportunity to depreciate the equipment the first year along with your payments the first year. Our deferred payment program, paired with Section 179, gives you the best of both worlds by allowing full depreciation this year and deferring your payments to the following fiscal year. Our first-year lower payment program, combined with Section 179 incentives, makes cash flow king by providing lower payments the first year and full depreciation. To find out more, give us a call or find us online at cccKC.com and learn how lease financing with Commercial Capital Put your business on the fast track to more. Okay, thanks everyone for watching that video. And now we're going to go over our promotions that we offer with Section 179. And that is the Baker's Dozen, first year lower payment, 90-day deferred. And for a bonus for everyone, we always offer all these promotions. Anyone, they're all your choice in the last quarter of each year. Who can benefit from Section 179? All businesses, C Corps, S Corps, partnerships, sole proprietorships. What equipment? I'm always asked what equipment qualifies. So I put together a brief on each different equipment that does qualify. Equipment purchased for business use, machines, etc. Tangible personal property used for business. Business vehicles with gross weight in excess of 6,000 pounds. Computers. Off-the-shelf software. That's new this year. Office furniture and office equipment. Property attached to your building that is not a structural component of the building. Printing presses, large manufacturing tools and equipment, large format equipment. Partial use, equipment that is purchased for business use and personal use. Generally, your deduction will be based on the percentage of time you use the equipment for business purposes. Certain improvements to existing non-residential buildings, fire suppression, alarms, and security systems, HVAC, and roofing. Please note that all the above equipment qualifies whether new or used, but must be new to you. And again, that's new in 2018. It used to be, it had to be new equipment. Couldn't be, used equipment did not qualify. And it also qualifies whether it's purchased, outright, leased, or financed. Do your customers know that your products are 100% deductible? You always got to ask yourself that, because as long as it's out there and the government has made it available to you, you might as well know as much about it as you can. All business owners want to save money, and buying your equipment can save their money. Putting equipment in place can qualify for that and save business owners money. Why? Because it lowers their tax burden by utilizing Section 179. Your equipment can be 100% deducted in the first year instead of over the life. This means the equipment virtually pays for itself with a lessened tax burden to your customer, growing their bottom line. Now, you do have to remember that with Section 179 and leasing, there are 3 types of ways that you can pay for it. You can either pay with cash, right out of your pocket, but again, that affects your cash flow and your bottom line profits. If you lease it, utilizing a dollar buyout lease or purchase upon termination, which means it's a guaranteed purchase with a balloon at the end of the term, then you can deduct and use Section 179. Now, a fair market value lease does not qualify for Section 179 when you purchase equipment utilizing fair market value, because you don't own the equipment. You have the option to purchase the equipment. It's not an agreed upon amount at the end. So now you've learned a lot about Section 179, a lot about me, and a lot about leasing. So think of the money you will save by utilizing Section 179, leasing, dollar out leasing, purchase upon termination, and giving me a call at Commercial Capital. Look at what a happy customer you'll have. Thanks again for your time today. Contact me on how I can partner with you to enhance your businesses.
Thank you,
Thanks
Camille.
for choosing. Thank you, Ed. Back to you.
Sure. Hey, I want to remind the attendees that you can ask questions on your question panel there. Camille has given us a lot of information, but if you have any specific questions, please ask them now, and we can share the answers with everybody. Camille, while I'm waiting, we don't have any questions in at the moment, but I have a couple that I wanted to quickly raise with you while we're waiting.
Okay.
First is if somebody wants to take advantage of this, the 179, what's the paperwork involved in it? And is that something that requires an accountant to get involved, or is that something that owners can do on their own?
You simply, well, you can do it on your own because there is when you're filing your taxes, every sheet has a number, and I believe, I don't want to misstate what that is, but you can, for sure look up Section 179 with the IRS. It's all over there, and it gives you directions, and it's simple. You just take the total cost of your equipment, deduct it depending on your tax bracket, and then write it off. So basically putting money back in your pocket instead of paying Uncle Sam.
Got it. Okay. Thank you. And my next question, Camille, is as you know, many APDSP members help their customers lease equipment, as part of their business. In that instance, the deduction is going to the end customer, right? Not the repro shop.
Correct. If their customer is using a dollar buyout, if they're selling equipment to their customer and their customer is utilizing whether it's cash, dollar buyout lease, or purchase upon termination lease, the customer takes the deduction.
Mm-hmm.
If a reprographic house buys equipment for their business, whether it be a flatbed, a new, large format plotter to put into place, then they get to deduct that in the same way, whether they are using cash, whether they're doing a dollar buyout with me, or whether they're putting it with a lease option of a put.
Got it. Okay. Understood. And when you work with a reprographics shop, knowing that they are going to lease the equipment to their customer, their end customer, rather than use it themselves, then you can guide them on how to explain this deduction to their customer, right?
Sure, that's right. Mm-hmm. Right. We have the flyer available to them, and we've had it, and that one is fully updated with all the numbers and everything. And, basically what I tell them is that, you could always start it off, lightheartedly. Make sure you tell them that, you're not a tax advisor, but make sure they know that they can utilize Section 179, especially if they're doing the dollar buyout or the put option. Much like I always like the quote from John Paul Getty, which is, lease what depreciates, purchase what appreciates.
Great. Well, on that thought, let's wrap it up. We don't have any other questions from attendees, so your presentation must have answered all their questions, Camille. Thank you. This is the last webinar for 2018, but we will have another full slate of them, 4 more in 2019. We're now working on the topics and the timing and the presenters. So please, everybody, stay tuned for more information about what our webinars will be for next year. And we will be asking on the APDSB member renewal forms for ideas. If there are certain issues that you are particularly interested in seeing a webinar on, or having a live event on, you can let us know when you renew your membership. All right. Thank you again, Camille. I appreciate your time this morning, and thank you, everybody else, for attending. This webinar is now ending.
Thanks, Ed. Have a good day, everyone. Bye.